Welcome back to Chain Train, your go-to source for everything crypto. Today's episode covers the biggest breach in crypto history, North Korea's role in cybercrime new regulations across the world, and how a looming recession could shake the market. From Korea's corporate crypto push to India's latest scams, we break it all down. Stay tuned. The $1.5 billion Bybit hack on February 22, 2025 by North Korea's Lazarus group is the largest in crypto history, highlighting security gaps in digital assets. Hackers exploited a vulnerability in Bybit's software after CEO Ben Zhou approved a routine transaction allowing them to steal 401,000 ETH. Unlike traditional stock exchanges with centralized security frameworks, crypto exchanges lack multi-layered protections, making them prime targets. The breach has shaken investor confidence and intensified calls for stronger regulations. Bybit is working with experts to recover funds, but until the industry balances decentralization with security, major hacks may persist. The U.S. Justice Department seized $201,400 in cryptocurrency linked to Hamas, disrupting a laundering scheme that allegedly processed over $1.5 million since October. The funds were funneled through at least 17 cryptocurrency addresses and moved via virtual currency exchanges. The FBI leading the investigation stated that seizing terrorist funds weakens their operations. The Justice Department reiterated its commitment to dismantling Hamas, which has previously used cryptocurrency for financing. In 2023, Binance paid over $4 billion in a settlement for failing to prevent transactions linked to Hamas and other terrorist organizations. Ziglu, a UK-based digital banking and crypto platform, has launched Crypto on Card, enabling customers to spend cryptocurrency using their Ziglu debit card. The feature automatically converts crypto to GBP at the time of purchase and allows users to prioritize spending from multiple accounts. If funds in the primary account are insufficient, Ziglu pulls from other designated accounts. The card is compatible with Apple Pay and Google Pay, offering transparent rates and no hidden fees. CEO Mark Hipperson calls it a major step in making crypto usable for everyday transactions. Ziglu recently raised £5 million and secured a £10 million term sheet to fund its upcoming stablecoin launch in Q2. Israel appointed General Res. Yossi Karadi as its new National Cyber Directorate Chief, replacing Gabby Portnoy amid rising cyber threats. In India, cybersecurity startups are attracting investments as AI-driven threats grow. Meanwhile, Bybit suffered a historic $1.5 billion hack by North Korea's Lazarus group, exposing vulnerabilities in crypto security. The US seized $200K in crypto linked to Hamas, reinforcing financial warfare against terrorism. Mitel issued an alert on a high-severity XSS vulnerability in its My Contact Center, urging users to update or disable the affected feature. In the UK, Ziglu launched Crypto on Card, allowing real-world crypto payments. Japan's FSA plans to regulate crypto as financial products by 2026, while Trump announced a national crypto reserve aiming to make the US a global leader. In India, crypto remains legal but unregulated with taxation on profits and RBI skepticism over financial risks. The FDIC has issued new regulations allowing US banks to directly engage in cryptocurrency without prior approval, provided risks are manageable. This marks a major shift from 2022's stricter rules enabling small and medium-sized banks to participate in crypto custody, stablecoin reserves, and payment activities. The OCC had already confirmed in February 2025 that national banks could legally conduct these activities without regulatory approval. With both the OCC and FDIC supporting crypto integration, only the Federal Reserve's stance remains. FDIC Acting Chairman Travis Hill and OCC Acting Comptroller Rodney Hood, both pro-crypto, are leading the shift. This move is expected to normalize cryptocurrency in banking, paving the way for mainstream adoption and more convenient crypto payments, potentially driving the next wave of market growth. Cryptocurrency scams have surfaced in Assam, with scammers exploiting investors seeking high returns. Fraudsters pose as investment managers, promising big profits and requesting upfront fees only to disappear with the money. Victims may initially withdraw small amounts to build trust, but ultimately they lose their investments. Assam police busted multiple multi-level crypto scams in March 2025, arresting 5 people in South Salmara Mankachar for running fraudulent schemes like RSN Crypto Token and Crypto TLC 2.0, which falsely claimed 6% monthly returns via AI-powered forex trading. Over 1 lakh investors reportedly put in Rs 200 crore. The scammers used platforms like PhonePe, Paytm, and Binance to launder funds into US dollar tokens before transferring them abroad. Assam police urged the public to verify investment legitimacy, warning that greed and blind trust often lead to financial losses. Greenberg Glusker law firm won a $33 million arbitration award against T-Mobile for its role in a SIM swap-related cryptocurrency theft, marking a significant legal milestone. The arbitration panel held T-Mobile responsible for multiple security failures that enabled the attack, leading to the theft of digital assets. SIM swapping occurs when attackers fraudulently transfer a victim's phone number to a new SIM, gaining access to sensitive accounts, including cryptocurrency wallets. The ruling reinforces the need for telecom providers to strengthen security measures and be held accountable for breaches that facilitate financial crimes. Korean cryptocurrency exchanges are actively attracting corporate investors as regulations gradually permit corporate investment in virtual assets. Upbit and Bithum have launched dedicated corporate account sections, while Corbit has partnered with Shinhan Bank to expand services to government agencies and listed companies. Koinone is in talks with Kakao Bank, while GoPax has yet to initiate corporate-focused efforts. The Financial Services Commission's phased plan allows law enforcement and nonprofits access in Q2, with institutional investors and corporations to follow. Analysts predict corporate investment could inject 46 trillion won, $31.2 billion into the market by 2030. Industry experts expect heightened competition among exchanges as they shift from retail to corporate clients. Market analyst Nick Puckrin warns of a 40% chance of a US recession by 2025, which could impact cryptocurrencies. He cites Trump's trade tariffs and budget cuts as potential triggers. The US dollar index DXY is weakening, pushing investors toward European markets and hurting risk assets like Bitcoin. BTC, which hit $109K in January 2025, has dropped 24% due to tariff concerns, while altcoins face steeper declines. Analyst Nikolai Sondergaard predicts continued pressure until April unless diplomacy eases tensions. However, Marcus Thielen of 10x Research sees hope, suggesting Bitcoin may bottom in March with a potential rebound if Trump's policies soften. That's a wrap for today's Chain Train. As the crypto world faces security threats, legal battles, and regulatory shifts, staying informed is key. Will the market bounce back, or are we in for more turbulence? Subscribe for updates, and we'll see you next time.